Welcome to TheoTrade. This is Don Kaufman. It's October 25th, 2024. We're just a few minutes after the cash close here on this Friday afternoon. S&Ps haven't missed their toads wild ride of a day. Look, the bottom line is we actually saw some decent volatility throughout the course of this week. And, well, good trade is about to get a lot better. I'm going to explain that and much more here, of course, on this TheoTrade weekend update. Let's first break down some of the price action that we saw, because again, it was rather exciting, shall we say. Again, we're starting to really emerge right now into some two-sided trade. Some great strategies opened up this week for us. I mean, everything from like in-out spreads to earnings butterflies. I'm going to talk about butterfly wonderland here because we definitely hit some butterflies. But so in-out spreads, some earnings butterfly, SPX butterflies, things really, again, started to open up in that two-sided trade. But there's also some big inherent risk factors right ahead of us. Let me explain. All right. So inside of the S&Ps, rather than look at the S&Ps, I don't know, this doesn't look like that much. Well, we were up here. I mean, up here is what? You got to have some respect. When I say there's some two-sided trade, in a marketplace that was actually up to 5,900 this morning, had a wild reversal all the way down, okay, to 58.43. So you're looking at the in the midst of like, a 60-point S&P reversal, which is ironic. And I'm going to tell you exactly why it's ironic, because if you look at the S&Ps, specifically SPX, the expected move for this entire week of trade was $69. So you're looking for a $69 move all throughout the course of the week, obviously, okay? We did $69 and more. Then we actually rallied back up. But you got to have respect for the fact that when I'm talking about two-sided trade, I mean, today we went from literally unchanged on the week. That right there in the middle of your screen, that is massively unchanged in the week. We went from an open where we're unchanged in the week, and we tanked all the way back basically to lower edge of the expected move. And I have to tell you, I like it. That's all I ever ask for, people. Is some two-sided trade. I mean, that's all the trader can ask for. I know a lot of people are like, no, I just want NVIDIA to go up, and I get it. But as you become a trader, you're going to want two-sided action, because two-sided action creates, well, a hell of a lot more opportunity. I mean, today, I can start off with a couple of the trades, though. Today, I did everything from scalping the QQQ. The Qs ended up $3. But I'll tell you, if I cruise over here to the account statement, we'll just like literally look at today's trade. Couldn't be any easier than this. Went out and bought a QQQ put for $1.28, closed out of it for $2.90. Okay, and that was just kind of off the side of my desk. I also traded in and out of some butterflies here that I'm going to show you in a moment. But that's what I'm talking about with two-sided trade, because it starts opening up some opportunities. Again, in a percentage return, you're like, all right, so you made, okay, look, you're making over 100% on an intraday basis with no more than $1, or $128 of risk if you did a one lot. Okay, and that is just gold, Jerry. That's gold. And I get excited about two-sided trade because, as I said, it's about to get better, and that's what I'm going to show you here. One of the first things I do want to display, this one is actually pretty wild and unusual. There's some sector rotations that are underway. So we're going to break down a couple of the sectors here to begin with. Let's jump back over to the chart for a second. And you know what? Hey, look, I'm on the QQQ. Let's go to auto expected moves. And auto expected moves, what I wanted to show you with the Qs is, okay, the Qs literally ended up unchanged on the week. In fact, the QQQ has not moved at all, okay, in the last 2 weeks. In fact, you could argue that the QQQ has not moved not only in 2 weeks, there's 3, there's 4, in 5 weeks, okay? There has been no upward momentum specifically in the QQQ. So, to read, like, I know a lot of people are like, oh, I'm going to read into the technicals over here. There's nothing. You got absolutely nothing inside of the Qs. Meanwhile, when I talk about some sector rotations, take a look at the financials. The financials, okay, which have been recently dragging the S&Ps higher, kicking and screaming, right? This is the S&Ps being dragged higher. The financials, they got clocked And it basically all happened today. And of course, everybody's pointing fingers. It was this, it was that, it was the other. Maybe they were in just a wicked overbought stance. By the way, that's another one where I actually hit that trade throughout the course of this week too. If I just go back here, I'll go back, let me see, 10 days and see if that's enough. We'll actually cruise back to the trade history. Yeah. So I actually opened up financials. I opened up a couple of positions of financials. So I shorted, a few hundred shares of stock, actually a few thousand in here, of at 47.30. Obviously, we're trading, considerably lower than that. Nevertheless, okay, I also hit an in-out spread for a decent return here, just north of about 30% on that in-out spread. Again, two-sided trade is what this kind of amounts to, but the financials are pulling in, and they're pulling in pretty good. Okay, that was actually really what weighed in the market. And when you're looking around the rest of the marketplace, you're like, well, what good news is there? Again, what is there that's working really, really well? The QQQs, as I said, are flat. The financials are down. If you look at the energy sector was basically unchanged in the week. You're like, oh, I know. Let's go look over at like utilities. Okay, utilities, yeah, they got crushed. They actually got crushed in the week. Well, let's look over at consumer staples. Okay, and consumer staples, oh yeah, they got crushed in the week. Well, let's go look over at look, I was actually kind of surprised that the market did as well as it did this week, because everywhere I looked, again, I was looking at XLU. Okay, I looked at SMH, which is of course none other than semis. Okay, I was looking at healthcare. Take a look at healthcare. This thing got killed throughout the course of the week. Then I was looking even like material sector. It got killed throughout the course of the week. There's big sectors underway right now, big movement and big rotation sectors underway. It's everything is getting hammered right now, with the exception of tech. Okay, and you need to recognize that, because we are, of course, coming into, well, the pinnacle of the big, the bad, okay, the earnings week. And this is the week that's, how do I say this eloquently, is going to separate the big tech from the boys out here. Everything from your Microsofts, your Apples, it's all coming, people. This next week is the biggest earnings week. It's the apex of your entire earnings season, and I have to tell you, I want all of it. Okay, and the reason I want all of it, the kind of trades that we have actually been playing with lately, and it's very much back over here. If you take a look, this is an earnings related trade in Capital One Financial. Here's actually a trade. I did this trade live in a presentation, and here's a trade where I risked 28 cents. I was able to close this one for $1.10, and that is what is that? It's a 293% gain. Again, it's a 293% gain. All this is basically just a screenshot, obviously from Thinkorswim. I also hit another one which I'll display here in just a moment. But again, those types of trades are in. By the way, I also don't mind mentioning, I lost on two other butterflies, but the losses are basically like 30 cents. Okay, what does it matter when you're actually hitting grand slam home runs in some of those butterflies? Okay, that is what you want to do. So the big, the bad, the earnings week is coming, and this is a week where again, anything is going to be plausible, especially when you have sector rotations underway, and there is, okay, broad-based weakness in most of the sectors of the S&Ps. I just displayed it, and it's exactly why I displayed it. So you're coming in to this tech week, this big tech earnings week, with a very, very vulnerable marketplace. And I just wanted to describe that. Now, the marketplace sees that. And you go, well, how do you know that? How does the marketplace see that? Okay, because VVIX is actually seeing risk come back. Now, a lot of people look at VIX, and you can see VIX toward the end of this week upticked. Now, I want to show you something interesting about that. Okay, everybody agree, VIX basically closed, okay, at the high of the week. There was one little tail over here, but did VIX close at the high of the week? Yes. Okay, that's unequivocal, like you can see it. So out on equivocation, we can say VIX closed at the high of the week. But the interesting thing is, if you look at the S&Ps, okay, the S&Ps, they closed, but they had actually traded considerably lower. We actually had sell-side activity on Wednesday that took us all the way down to 5,800. But when we got to 5,800, did the VIX spike at that point? And you go, well, no, it kind of came up to basically where it closed on the week. that is interesting. To further that, I'm not a big VIX individual, but I wanted to describe it in VIX. To further that, we are going to look at none other, okay, than VVIX. Okay, why VVIX? Why not? We're going to look at VVIX because the VVIX really describes all of a sudden, okay, risk is put on your big boy pants. And that's why I said, good trade's about to get better. Hell yeah, it's about to get better. Look at the VVIX. This is hedging activity, and hedging activity is coming back in a big way. So the VVIX is the volatility index. And all of a sudden, you get all these broad-based weakness in sectors. And a lot of people are missing that. Look, you could look at the advanced decline line till you're blue in the face. But you start actually looking at sectors, and I have all the sectors on the bottom of my watch list. Like I keep them up here because I like to kind of cruise through. I like to be able to go, well, what is this doing? Okay, well, what is this doing? What is this doing? Like I actually cruise through all the different sectors, and I'm like, holy crap. Everything's down, not like a little bit down. Everything's getting crushed to the lower edge of the expected move. The only thing that happened this week that was positive, okay, is the NASDAQ. It didn't even go up. It just held us together. And of course, there's always going to be one out there. It's okay. NVIDIA's going to be here. NVIDIA did actually finish the week higher. Tesla held the whole world together this week. That's it. Okay. You may not like Elon Musk, and that is okay, but it is his firm that actually held your marketplace from absolute sheer and utter tankage throughout the course of the week. So love him or not, oh, he's up what? I don't know, another 40, $50 billion, okay, in net worth this week. That is a wild number. So VVIX sees the risk coming back. And moreover, if you actually go take a look at VIX options themselves, which I do look at this stuff, the VIX options themselves, they're actually kind of rocking. There was some serious amounts of volume trading in the VIX options. So all of a sudden hedging activity is coming back. Now, would I go as far to say, does this have to do with the election? Maybe. Okay, the election, but the other election trades, okay, are not changing, meaning that so volatility is coming back. Is there more uncertainty in the election? If that were true, I think you would actually see the dollar, okay, switch course. If that were true, I think you would see some other asset classes really have a more dramatic impact, okay? And you're not seeing big pullbacks in crypto. You're not actually seeing some wild trade inside of the dollar out there. And moreover, gold just keeps chugging right along. So the election trade still seems like it's, almost like over and done with. I think that VVIX and VIX are pulling back up because people are starting to get nervous about some of the earnings coming out of big tech companies. It's not going to be about what the earnings are in the quarter. They're probably spectacular. It's going to be about guidance. It's going to be about AI, right? And that's where things are going to get a little bit hectic out there. Now, switching gears, I need to talk about interest rates for a moment. They're a problem, okay? Now, people are like, tech doesn't matter. Tech loves everything. Tech doesn't need interest rates. Interest rates are becoming a problem. There's just no question. Everybody wants to, kind of blow this off. But how many times do I have to actually explain to people that we've moved? Okay, and this is since the Fed cut. Remember, the media is like, no, they cut interest rates. Yeah, right here when we were at 3.6%, that's where the 50 basis point cut was. Okay, yeah, we're now at 4.2% on the 10-year. That's absolutely sick in terms of a move. So this is a problem. It's a problem for everything. And the irony is, well, most of the sectors see it. And right now, though, you're thinking tech is immune. And tech may be immune because of like good earnings, for instance, in an Apple or decent earnings in a Microsoft. Okay. But the reality is, if these rates continue actually on this, what I would term parabolic move to the upside, okay, sorry, this is wildly, this is rates, interest rates, this is wildly bearish, okay, for the S&Ps. And it's probably also one of the reasons you're seeing like gold still rock to the upside, okay? People get it. The rates going up are displaying, okay, uncontrolled inflation at this point. And you can't disagree when you're looking at things like, gold also appreciating. So rates are going up, okay? Gold is actually going up. This is not good. It is not a good sign. And there's a lot of things that are worrisome, and to worry about. I think gold is probably the most influential to me. And, what keeps you up at night? Watching gold rally okay, with the dollar exploding higher, kind of keeps you up at night. That's not a warm and fuzzy place to be. And again, that is something that I think that the marketplace is starting to get concerned about. And that's actually one of the reasons, if you will, that the SPX is closing to the lower edge of the expected move. The financials and all the other sectors are feeling it. Right now, tech is immune, but tech is only immune, okay, until their earnings. And after their earnings, it's on at that point. All right. So let's talk a little bit about what I term butterfly wonderland. So in a lot of these earnings, okay, I'm actually going to be able to take some lovely shots out there, what we actually call earnings flips. And we use a type of butterfly for this trade. As I was showing just moments ago, okay, I was actually able to do this on Capital One Financial. We turned 28 cents, okay, into $1.10. Again, you do 10 contracts of that. It's basically $280 turned into $1,100 with, again, very, very negligible risk. As I was showing, 28 cents. Why wouldn't you want to take that shot? And you can take at least 5, 10, 15 of these trades in any given week when it's earnings season. I'm going to be all over it next week. The next one on the docket over here, take a look at this one. Now, this is a slightly different trade. This is actually, okay, in the SPX. This is a weekly expected move butterfly, okay? I'm basically just playing with putting a butterfly on the upper or lower edge, okay, of an expected move. And in this particular week, and it's been a while since I've actually traded one of these live, but in this particular week, okay, you can see I actually turned 60 cents, which is a $60 debit, okay, into $345. Of course, you could have done 10 lots of this, 600 into $3,450. People, that is a 400, again, a 475% return. And again, with nominal risk. And if you're comfortable, be Captain One Lot out there. Nobody has to know your trading size, and that is just fine, okay? But these are the kind of trades where I'm saying right now, it's good trades about to actually get better. Why? Well, let's get down to it. Now, we're going to talk about SPX expected move. And I do this every single weekend update to talk about expected move. But this is the first time in a long time that you've actually, hey, Don, how come you traded it? Look, I very often do trade SPX butterflies. And by the way, if you're kind of curious about fills and so forth, all right, you can actually see some of my fills. There's actually the Capital One butterfly. I'll just create the duplicate order, okay, filled over here. If you take a look down below as I scroll down my order book, it's probably easier just to come over here to activity and positions, okay. Here's actually the Capital One, some Home Depot trades. Here's actually the SPX close for 345. Okay, just killing it out there on those things. But I talk about the SPX, expected moves every week, and people are like, can you just trade it for it? Okay. Okay. So, we do 3 trades per week inside of the chat room, and that'll be one of the trades each and every week. And I got to tell you something right now. Even if you strike out, who cares if you strike out 2-3 weeks in a row? It doesn't make a difference. Why? You just got a 475% return. That's going to pay, okay, for a whole lot of trades. And once in a while, okay, that little, 60 cents could have turned into as much as, all right, 60 cents can turn into as much as $15. This is a 15-point wide fly that I did in there. So that was winner, chicken dinner on that one. Meanwhile, inside of the SPX, we just came out of a week, as I said earlier, that had a $69 move. Okay, what's the move this next week? And this is the official expected move. Wait for it. And this is why I said good trades getting better. You're going to love this. Okay, boom. We're up to $105, okay, of expected move next week. And you go, wait, what? That's right, people. You're up to $105 of expected move next week. So right here, okay, it's going to be expansive, people. So you're going to have basically $105 higher, okay, or $105 lower. And when you see a move, this was like 69 bucks, jumps to like what, 105? When volatility is moving between 30K to 40% in a given week, it's going to get serious out there. That's exactly why I prefaced the entire discussion. Good trades about to get a lot better, and it is a butterfly wonderland. Thanks everybody for joining us here at TheoTrade. Have a wonderful weekend. Bye-bye.